Hey everyone, it's Nick and Chelsea Drislow here with the Drislow's Happy Home team to chat with you today about what is earnest money and how it is used when you're purchasing a home. So Chelsea, what is an earnest money deposit?
So when you go to make an offer on a home, the security for that offer is the earnest money deposit. So the seller is going to be taking their home off the market if they accept your offer for a term that'll allow you to get your financing done, get your home inspection completed. So while they're holding the home off the market, you have this earnest money deposit to kind of keep them secure. Also, in case you defaulted on the contract, they have that earnest money deposit to kind of hold you to the deal. So it keeps you held to the fire.
Okay. So what protects your earnest money? Like you have contingencies, right? Let's say. So how does that work with your earnest money?
So your earnest money gets deposited right at the beginning of the transaction, but it is held in the escrow office. So that's at a neutral third party's office.
Okay.
So the seller doesn't get it in their pocket unless you decide to go ahead and do that, but that's at your option. Generally, it's at the escrow office, and then it's held when you get through your inspection contingency and you go through your financing contingency. If something comes up during the inspection and you're not happy with the way things are at the house and the seller's not willing to fix those issues, then your earnest money would be refunded back to you. Same with if something came up with the financing and you weren't able to get your financing to go through, your earnest money would also get put back in your bank account at that point in time.
Okay. So I guess more or less it's kind of like all the contingencies are done, inspection's done, financing's done, everything's satisfied, and then just if the last minute I just decide I don't want to buy this house anymore and I've already done all these contingencies, that's when the seller could try to say, hey, you're in breach, I get to keep your earnest money.
Essentially, yes.
Okay.
The earnest money is there. It's just in case you default on the contract. The seller's holding the house off the market, waiting for you to get your part of the end of the deal done. If you're not going to uphold your end of the deal, they have some security for that. So it also limits your exposure. So they can't just like, hey, you didn't purchase the house you said you were going to, so I'm going to sue you and make you buy the house, or I'm going to damages additional to that. It limits your exposure to just that amount of the earnest money deposit. And that is generally around 1% of the purchase price is kind of the minimum standard of what we would expect to go there, but more is better. So the stronger the earnest money, the stronger the offer. If you're not planning on defaulting, then go ahead and put it all out there. It goes applied towards your down payment and closing costs at the time of closing, so it's gonna go towards the purchase anyway, so why not? If you're planning on buying the house, it's not really much of a risk.
Right. So yeah, and the earnest money can be an important negotiation tactic because say if you have two offers that are comparable in all the other price and terms, but one has a higher earnest money than the other, that in itself could be the difference maker, right?
Yeah, if all things were the same, if every other term was the same in the offer, one had $5,000 earnest money, one had 10, we're definitely going to pick the one with $10,000 earnest money, hands down.
And if somebody came in with like a really low earnest money, that might cause a seller to lose confidence, right? That they're like, wow, this is just a tire kicker, or they're not really putting any skin in the game.
If somebody came in with someone showed up with a $500 earnest money deposit on an offer, the seller may not even take that offer seriously. They could have no other offer to choose from and still just pass on your offer.
Got it. And then when is it actually due? I know you said in the beginning, so how much time do they have before the funds are actually going to come out of their account? Like if I need to sell some stock or move funds around, when do I need to have that ready to go?
So we can extend it out a little bit, or we can get it done right away. Essentially, they have 2 business days from the time that the offer is accepted to deliver the earnest money to the agent or to escrow. If they deliver the earnest money to the agent, then we have an additional few days to get that process through. So that would extend that to like more of a 5-day timeline instead of just a 2-day timeline.
Okay, perfect. Anything else that we can think of they need to know about earnest money?
I don't know. If you guys can think of anything else you want to know about earnest money, you can call, text, email. We're always happy to help anytime. HappyHomeTeam.com.
Thanks, guys.